jitters ahead of the 2024 Lok Sabha election results. Sensex and the Nifty fall 2% this week, while the Nifty Bank outperforms the blue chips. Hello and welcome to the Editor's Roundtable. Today we take a look at what brokerages expect from the election verdict. We tell you why the PSU rally gets a reality check, and we put the spotlight on RBI's move to bring back 100 tons of gold back to India from the United Kingdom. I'm Sonia Shanoy, and today with me are my editors Nimesh, Nigel, Prashant. We also have Anish Tawakley, the Deputy CIO for Equity at ICICI Prudential Mutual Fund. Anish, thank you so much for joining me on the show, joining all of us actually. It's been an interesting week, right? One where the market has showed some kind of jitters ahead of the election verdict, and rightfully so. I mean, this has been a market that has rallied so much in the last couple of weeks and months, but now is Judgment Day, so some jitters there.
You know, I'm almost glad that we're finished with this Friday, because last couple of days, you're getting closer and closer and closer to the end. The market does, I mean, frankly, the price action is not telling you very much. It's a little bit there, a little bit there. Some stocks are up one day, down, I mean, sectorally as well as flip-flop. So it's just kind of biding time, treading water, whatever you want to call it. And as you said, you know, pre-boards tomorrow and final board exam on, on Tuesday. So.
Actually, and you know, no one knows, right, which way things can go. Everybody is just guessing, everybody is expecting. But Anish, you come in on this as somebody who's tracked so many elections and markets. Does it really matter what the verdict is going to be, or is the market going to chart its own course post-verdict?
See, eventually what will matter is earnings, right? And if you take a 1, 2, 3 year view, earnings will matter. There will be volatility around elections. If you're a longer term investor, you might as well just ignore it. So focus on what the economic outlook is and take it easy.
Okay.
But for now, it does matter. I mean,
if you're, I mean, every day, obviously, there will be volatility, as I said. Market could move
I think
substantially.
If you go by history, right, I think in 2014, when the expectation was that BJP would come to power for the first time, at that time, I think the market rallied a lot in anticipation. I mean, it actually happened then, it had all played out. So there was not too much.
So there is generally an event of seller news on expectation that it was expected, and hence, you know, now once that comes, you see a bit of profit booking as well. Maybe it can come this time as well. But the only thing is, going into the big event, the positions are on the lighter side. A lot of the HNIs, a lot of the bigger investors whom I speak to, they seems to be on the sidelines, just hoping that let the result come out and then we'll take a big call. So, in a way, if there is a big, expected outcome, then you'll see a big reaction as well, because technically the markets are light and the FIs are short. So that's the only way to read that once the election outcome comes, and if it's in favorable, you might see a bit of a gap up over the next couple of days.
In that sense, nobody's in a tearing hurry that you have to do it something today, because you know on Monday morning you will find 10% something 10% higher. That is not there. Anish, you would agree?
Yeah, I would agree with that. I mean, unless there is a big surprise, I mean, a normal outcome should not lead to a very big move.
Okay, well, let me just put the market setup in front of our viewers, and then of course we'll move to some of the other big things that took place this week, right? The Nifty is down 2% this week, definitely pre-election jitters, pre-election outcome jitters rather. The Nifty IT index stood out actually. It was down 4.5% this week, and some big losers came in the form of IT stocks, whether it's Tech Mahindra, which was down 7% this week, Wipro TCS down 4 to 6% this week. On the upside, there were some gains in the banking names. So you had HDFC Bank, IndusInd Bank, SBI, but the gains were not too much, to be honest. It was just about holding afloat, and the Nifty Bank sort of batting for the bulls. The other big thing we noticed is that from the peak in the month of May, the Nifty has now fallen about 600 points. And, you know, there has been, of course, a lot of support from the domestic community, but the FIIs have not come back to this market in a big way. Anish, come in on that. Post the elections, if we assume that the BJP comes back to power, with not as high a seat count as one would have expected earlier, then how does the foreign community react? Do you think that there could be a fresh wave of money coming into India?
Look, if there is broadly positive views of the economy, right, I think the FIs will invest in it. It is a good investment destination and the economy is doing well. So there's no reason for them to stay away from these markets.
Anish, as Sonia pointed out, the big disappointment this week was the IT space. While the Nasdaq is hit an all-time high in the US, Indian stocks have actually gone down, and the index is down 4%. Broadly, from a medium-term perspective, what's your take on IT?
See, actually, that's a sector we are genuinely confused about, right? Okay. Because historically, when the US economy has been weak, that sector has struggled. Sure. This is the first time we are seeing a situation where the US economy is actually booming, right? The employment levels are very strong. They're actually short of people, and we are struggling to see growth. So that is really something that has happened for the first time, and we need to see how that plays out over the next 6 months.
So what are the key metrics that you'll be watching out for? What are the key things that you'll be watching out for, whether it's going to be
So
a
the
bad or a
positive
good year?
interpretation, right? The bull case is that, look, while the economy has been strong, CEOs have been unwilling to commit because they were nervous about the economy, and some discretionary projects have been postponed. So if those discretionary projects come back in the next, say, 3 to 6 months, then we'll say, look, things are back to normal. The sort of more bearish interpretation might be that, look, Indian IT is doing well, but the business is moving more towards the GCCs, the captives, and the vendors are finding it more difficult.
Sure.
That, I think we have to keep an open mind about that and see what the data suggests over the next 3 to 6 months.
You know, we can't get very far away from elections, right, today. So Nigel has sort of put together what brokers are really making out in terms of a strategy or whatever you want to call it, in number of seats, market reaction, Nigel, to simplify things. Go on.
Well, you know, let's just run through 5 brokerage notes that have gone through. IIFL, they are saying that yes, the voter turnout could be a little bit lower, but that is unlikely to change the final outcome. You know, and in terms of, you know, they have pointed a couple of instances as well. We have never seen 3 straight elections where you see a rising trend in terms of voter turnout. What are they expecting? 320 seats for the BJP. That compares with around 303. So that's IIFL Securities with regard to their note out there. JM Financial, well, they have come out with the note. They've given a bull case, which is at around 310, and the bear case they're working with is around 290. They're saying policy continuity is something that they look forward to. And if that's the case, then sectors that can gain, well, that'll be defense as well as cap goods, while there is valuation comfort on a couple of sectors, which is private banks and also the consumption stories. Now, they're saying, how do you play this? Volatility will come down, so the VIX will cool off. They're saying dips should be bought into, and they prefer the large cap names in comparison to the small cap names. And also, they're saying the next trigger then after the election, we look forward to the union budget. And what does the new government have to offer, and what do they have on the table? Their bull case is 325, and their bear case, which I don't think anyone's factoring in, is no majority. Moving to Phillip Capital, they've given stocks for the next 1 year and stocks for the next 2-year horizon. Stocks on the 1-year horizon, well, they're talking about PFC, REC, SBI, TVS Motors as well makes the list. While stocks with 2 to 3 year time frame, well, you're talking about HDFC Bank, larger banks in there. HDFC Bank, ICICI Bank, couple of pharma names as well, Divi's Laboratory, SRF, and Aarti Industries. CLSA, they have identified some potential Modi-related stocks, which they have termed so. And they are saying that, in fact, in a few large cap names that come on their radars, L&T, Reliance Industries, you have MGL, Bharti Airtel, all of them should be on your radar. What is the strategy? Well, they're saying narrow-based themes. Well, that rally could end, you know, just the near term, the ones that you were playing only for this election outcome. While for banks, risk reward is very, very beneficial even from here on. And they as well have highlighted some of those larger banks which come up for you on the screen. But beyond the rally, well, they're saying some of those themes could get sold into, because some of the good news is already in the price for some stocks. And we saw this even in the past. In the previous 2 elections, some of these PSU counters, they came in for profit taking immediately after the election. And finally, Nomura, they have done an investor survey, small bunch, 150 investors. All of them are factoring in a BJP victory. But the variation is in what is the quantum of the victory. However, you know, they also go to add that the victory margin could be a little bit lower than what we saw in 2019. So that's what all of them have to say. What do you make of it, Anish? I mean, what's the bull and bear case for you? And, you know, just one factor, we spoke about the FIs, they have been on the sidelines, or maybe in terms of emerging market flows as well, they have been selling out here. What could take this market higher? It could very well be the FIs, because they have been selling and they're net short on this market. So the near-term support could come from them. Your take?
See, I don't really like to take very near-term views. My simple point is that, look, there will be election volatility. That's one should assume that will happen, right? But as long as, let's wait till the budget. As long as there's policy continuity, the economy is doing really well. So, and I'll tell you how my portfolios are positioned, which are public, right? We are positioned for a strong economy, right? So we have got positions in domestic cyclicals. These are published positions. But at the same time, we've got a little bit of cash, so that if the markets take a hit, when the economy is healthy, you have the ability to deploy more. Right? Okay. That's the only way I think we can handle it. Otherwise, you know, you can one day feel good about this, one day feel bad about it. So.
Yeah, all right. And it's just one thing, you know, and once we're not talking about it so much, how much of the good news is in the price is what you're asking. But what if the BJP comes up at 280? Or do you think
I have no idea how the markets will react because I don't know the positioning is. I really have no view on what short-term moves will be.
Okay, all right. Since we are talking about continuity, let's focus on the PSU counters. Nimesh has done some study. Nimesh, some of these counters, they have run up big time. But I think in the past quarters number, some of them saw some margin compression.
Absolutely.
Tell us more.
So, not some. Actually, the list what I'm going to show, all the PSU stocks are in the green, up between 1x to 4x or 5x. But quarter 4 was a bit of a reality check. Let me just go to the wall and explain what has happened in the PSUs in this quarter 4 as far as earnings are concerned. First, the big picture. We've seen a big rally in the PSU stocks in the last 1 year, and this will show up. Look at this chart. Every index, PSE, Nifty CPSE, BSE PSU, Nifty PSE, and Nifty PSU Bank, all have actually given at least 100%, close to 100% return in the last 1 year. But now we'll come with a real picture. There are a lot of stocks where the earnings have been a big disappointment on a YOY basis. There are a lot of momentum stocks in this. ITI is up almost 2x, but the margin miss has been 2,800 basis points. NLC India, the stock is up 131%, but big miss in terms of EBITDA margins on a YOY basis as well. So that's something where we've seen a big miss as far as EBITDA margin is concerned. Even the second list of stocks where you're going to see a big miss in terms of EBITDA margin. So big momentum stock. SJVN is up almost 35% in the last 1 year. But the EBITDA miss Y&Y is 900 basis points. IRFC, another momentum stock, up 450%. But look at the EBITDA margin miss. 850 basis points is the YY EBITDA margin miss. Same is with Engineers India. The stock has seen a bit of momentum of late, but earnings have been quite disappointing there as well. That's the first list. There are also some stocks where the EBITDA margin miss is in the range of between 100 to 500 basis points. Here also you are going to see a lot of momentum stocks. BHEL, the stock is up 258% in the last 1 year, but look at the performance in terms of EBITDA margins. It's down 360 basis points on a YOY basis. Same is with IRCT as well. IRCTC up 59-60%, but there has been a miss in the EBITDA margin. So that's been the kind of performance where there has been a big miss. Same is the case with Hudco. The stock is up 350 basis points, but look at the earnings. Again, there has been a 350 basis points margin miss on a YOY basis for this particular companies. However, there are some companies in the PSU basket which have done well as far as earnings are concerned, and this is a list that's going to show up. Cochin Shipyard, Bharat Dynamics, Hindustan Aeronautics, Nalco, GAIL, all have been doing pretty well in terms of stock price. But look at the chart, look at the margin chart. They all have done really well as far as YOY EBITDA margin is concerned for this particular company. So, the broad picture is, look at even this names, Mazgaon Dock, Coal India, GIC Housing, all stocks have done well, but at least here there is an earnings comfort that the earnings have actually started coming up in quarter 4. So the broad message is, well, there's been a big momentum in the PSU stocks. Quarter 4 was a bit of an eye-opener that there are many companies where there's been a massive EBITDA margin miss, and that's something that investors have to watch out for. Your take, Anish, on the PSUs. We've seen a big momentum, but are you a bit bullish on that space?
So as a rule, when stocks move up and positivity gets priced in, at our house at iProve, we are very clear you have to start trimming positions, right? Look, there's been a PSU rally partly because these companies have improved in operating performance, but as that's also getting priced in. But I think the interesting point, what you said, like a lot of these companies that missed were actually small and mid-cap companies. And our view is that in the small and mid-cap space, not whether you leave aside whether it's PSU or whether it's private, there is a lot of over-optimism built in. And there is a lot of hype built in many cases, right? There are private companies where actually when you look at their balance sheets, there's significant deterioration in terms of inventory builds, receivables. The earnings don't show it yet, but there is deterioration in the balance sheet. So in the small and mid-cap space, PSU or non-PSU, I think one has to be careful, irrespective.
Okay, let's do one thing. Let's take a short commercial break, but we'll continue to decode the market action and the RBI's move to bring 100 tons of gold back to India. More on that coming up. Welcome back. You're watching Editor's Roundtable on CNBC-TV18. Well, the Reserve Bank of India has moved 100 tons of gold back to India from the United Kingdom. But what does this mean for you and me? Prashant decodes that for us. He's walked across to the wall. Prashant, over to you.
It's an interesting news item, isn't it, right? It's a headline grabber. 100 tons of gold being brought back to the country. This is, of course, our own gold, RBI's reserves. And this was lying in the UK in vaults, which has now been brought back to the country to be stored here. So it makes no real sort of difference to the price of gold if you're thinking about it that perspective, or to the economy or anything of that sort. This is just sort of reserves which we already know about. Out of the 800 sort of tons which RBI has as gold reserves, 100 have been brought back from overseas back to the country. This is essentially RBI's gold holdings, right? As of 2024, this is all March, 31st of March ended, and you can see how this number has kind of increased to about 822 tons of gold. Now, the question is, I'll get straight to it. Storing in India, or rather storing at home or storing overseas? That's the big question. And what I want to sort of put together, what I want to put out is basically this survey from Invesco Global Sovereign Asset Management Study of 2023. This was an interesting report. It came out in July of 2023. And Invesco basically surveyed 57 central banks, global central banks, and they also surveyed lots of, big CIOs, basically overall assets under management of some $21 trillion. For our purposes, the interesting bit, of course, is the feedback from central banks, right? And this is what the report found with respect to what we are talking about. They said that gold allocation is likely to increase over the next 3 years, most who were surveyed anticipate this. Not one central bank surveyed anticipates a decrease. So central bank demand for gold is likely to remain very, very strong. They go on to say that wars and US freezing of Russian reserves have prompted a flight to safety. This is a lesser talked about kind of event which really shook up financial markets and how some of these things were really conducted. Never before in the history, because of war or whatever else, had the sovereign reserves of a country been seized by other countries overseas. And what this has sparked off is, of course, the fear that the US, especially because it has a reserve currency, can weaponize the reserve currency status. It's sparked a sort of flight of safety into gold, and also bringing some of this gold so that it's with you in your own country, and it can't be sort of seized or whatever else. I'm not saying that these were the motivations for the RBI to do what they've done, but this is interesting, especially because the report and the survey with so many central banks highlighting this really points out. They say that they prefer, and this is all central bank feedback, they prefer physical gold as compared to gold ETFs and derivatives. They continue to say, and this is, by the way, an interesting comment. This is a comment from a Western central bank, and I just want to read this out for you. They don't name which is the central bank, but they say, we increased the exposure to gold 8 to 10 years ago and transferred gold reserves back to the country. We did have it held in London and could use it to enhance yields and for swaps, but now we've transferred it back to the country to hold as a safe haven asset and to keep it safe, right? The question of keeping your own reserves safe from the kind of activity you saw back when the Russian reserves were seized, did not arise before that, but I think it's really something which is on the minds of a lot of central banks, as this survey indicates. This is a question which they asked: physical gold held in your own country, and this is the report on the central bank feedback. In 2020, there was 50%, 68% now. In 5 years' time, that number now at 74%. Just sort of leaving you with 3 other points. The record buying of gold really happened in 3 phases. The first one, of course, was in 2014 with the Russian annexation of Crimea. And there were sanctions which followed on Russia. Then, of course, there was the US-China trade spat. China has been a big buyer of gold. And, of course, the latest is when the seizing of these reserves really happened. Forecasts for how much gold central banks would buy: over 1,000 tons this year in 2024, right? So that's big. Central banks are now absorbing between 25 and 27% of annual gold mine production. And remember, gold production goes up 1.5–2% every year. Central banks are now buyers of about a quarter or more of that particular production. And post-COVID, buying is led by China, but also includes a variety of emerging markets and some developed markets as well. So, the marginal buyer of gold is not just retail, and that demand, of course, is there, but central banks also really big buyers now. Anish, you guys run that multi-asset fund, and you've been sort of propagating that. It's done phenomenally well, not least because of gold. Your thoughts?
Yeah, so, what is interesting is if you look at when gold was weakest, it was post the disintegration of the Soviet Union, when the Cold War ended, and, people started trusting each other. So central banks actually sold gold and built a lot of reserves in US dollars. Obviously, if geopolitical tensions rise, you're seeing a reversal of that trend. And that does mean, what that means is central banks hold more gold. Central banks hold less of, let's say, US dollars or European currency as reserves. And that does mean higher interest rates in the developed world, because this was effectively free financing that the reserve holders were providing to the hard currency issuers. So it does mean that we hold more gold and rates in the developed world are higher.
Stay a little higher.
Stay a little higher.
Okay.
Anish, the other big, talking point or a big question in the mind of the investor is the fiscal discipline as far as India is concerned. Your thoughts on what should, be the right path, growth versus, fiscal discipline?
So look, as the economy is picking up, fiscal policy should be counter-cyclical, right? So the temptation will be that tax revenues are rising, we can afford to spend more.
Yeah.
But that would be a mistake, right? That is actually the mistake that happened between 2009 and 2013. See, in the global financial crisis, the government gave a big stimulus, the economy recovered, but that stimulus was not withdrawn. And that led to an overheating of the economy. So at this time, with tax revenues rising, is the time to be disciplined on spending, not to be expanding spending. That is something that I would at least be.
Which is what the RBI and the monetary policy has been doing, right? Monetary
Yes.
side has been doing counter-cyclical policy.
And
So
the fiscal should also remain counter.
should remain the same.
Yeah. That will give RBI room to take a slightly easier stance. If fiscal is loose, then RBI will have to be very tight.
Okay, by the way, guys, it's almost time to wind up, but we're not done, right? We have Saturday night action coming up on the
Sunday morning
the
action.
exit
Sunday
polls.
morning, Sonia.
Sunday
Yeah.
morning as well. Prashant is
Sunday
hanging out.
morning as well. So, Prashant, I heard you're coming in on Sunday
Yeah, I
morning.
am. Yeah,
So, in case you miss Prashant, don't worry. You
and there
can
is
see him on the
and
weekend
I
also.
mean, that's of course with the Monday and Tuesday. Monday, of course, exit polls, and then
Yeah.
Tuesday
Then
the actual
Tuesday.
result,
Yeah.
which is going to be like full budget style programming. So it's going to be a big one.
Yeah, it's going to be a big one. So, well,
Sonia, where are you
keep
going
it
to be? I'll
glued.
see you here.
She's actually on a break, I guess, right? Enjoying overseas.
I'm going to watch you. I'm going to watch
So
you.
all the rich people, Prashant, in this time, in summers, they go all go abroad. So
So where are you going?
I'm not
Where are
here.
you going,
I'm not
Anish?
going anywhere.
But well, thank you, Anish, for joining
My
us.
pleasure.
Thank
Thanks
you.
for having me.
With that, it's a wrap on this edition of the Editors Roundtable. But stay glued to CNBC TV18 for all the news and updates.